Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center. And for nearly 3 decades now, I've been working with accounting professionals to help them start and build successful accounting, bookkeeping, and tax businesses. It's here that we focus on the various principles that you need to consider as you're growing your business, getting the clients you deserve, offering quality accounting services, and ultimately getting paid what you're worth. It's each and every week that we have on the show guests, various individuals that have their own expertise that they bring to the show to give their insights and their perspectives as to what it is we can be doing to, in fact, have the premier accounting firm in our area. Today's going to be an excellent conversation, something I've been looking forward to. It's someone that I really am excited to share their story. It's Shady Abboud. He happens to be a 38-year-old fractional CFO, as well as owner and founder of Storyline Financial, as well as CEO of Unloop. It's basically a full-service accounting company that specializes in e-commerce. He holds a bachelor's degree of commerce and an MBA, and actually has an entrepreneurial history of founding and selling 2 businesses that have extensive financial experience, lending financial divisions internally and externally for many companies in the e-commerce and professional service spaces. He's also operated in the SMB space, truly learning from the unique experiences and challenges of the owners and operators out there, which have given him a great variety of different perspectives as it relates to business that's different from large corporations. So, Shady, welcome to the show.
Thanks for having me, Roger. Really excited to dive in today.
Yeah, this is going to be a wonderful conversation. So let's start, first of all, with your history. I'd like to get a little bit of perspective as to how you got into the accounting perspective.
Yeah, for sure. I mean, I think my story is a little bit different than most people who run accounting firms. Typical stories probably started off from school, got their CPA right away, and worked within that industry all the way up, directly into accounting, looking at the books exclusively, and just going through these motions and leveling up that way. Well, mine was a little bit different. So I do have a Bachelor of Commerce, and then I did my MBA with a focus on finance.
Okay.
After that, I actually got into I worked in corporate a little bit, but then I got into entrepreneurship. So I did start and sell 2 businesses, and I think that gave me a very different perspective. And I'll talk about what then led me to accounting. So when I was founding and operating my businesses, they were small businesses, right? So I had to wear all the hats, basically, from marketing to HR to operations, and of course accounting and finance. So my last business that I sold was actually a restaurant. It was a passion project for me, but
Nice.
the week we opened, I found out my wife was pregnant.
Oh my heavens.
Yeah. And, I was spending 6 days a week working mornings till night. And I wanted to get out of that lifestyle to be able to be available as a father and support. And it was our first child, so I didn't know what to expect as well. So I wanted some freedom. I decided, okay, let me, get out of the entrepreneurship game, get, a 9 to 5, have a little bit more freedom in my life. So I had to kind of decide, what route do I take? I've wore all the hats. I've done it all, but my strongest suit was always accounting and finance. So I decided to go into that route exclusively, and I really enjoyed it. I mean, I love spending my whole days looking at numbers. The feeling I get when I create the very extensive financial model and put the final touches on it, it's such a joyous feeling to me. So it really went well, and I was doing really well. And the comment I kept getting from employers at the time was that I brought in a very different perspective to compared to other people they've had or worked with in the function before. And that was always a more strategic perspective, and an ability to communicate finance and accounting topics in a way that's understandable for people who weren't lifelong accountants or lifelong finance people. So having that kind of consistent feedback, and I think part of the reason I got that feedback was my experience coming from, running businesses and understanding what the business owner's mindset really is, what they care about, what they want to hear from their accountant or their head of finance. So that's where I think I got it. And then I decided to essentially go off on my own again, in a little bit of a different manner, because, you know, offering a service has similar lifestyle and hours as to just being an employee at 9 to 5, right? It didn't require me to necessarily work weekends. I mean, sometimes I did, but yeah, that's kind of what brought me into here. And I'm sure we'll dive into a little bit more about the strategic advisory angle to accounting, but that's kind of the history.
No, I love that history, and I appreciate you giving us that perspective, because that context is helpful for the conversation we're about to have, because you've got the two businesses that you started and ran, sold. Obviously, that entrepreneurial drive is very critical, I think, to the perspective you have as you work with other business owners, as from the accounting point of view, let's say. So as you get into, let's say, the accounting role, one of the things you mentioned is that you had a different perspective. You felt that they appreciated your perspective, that you were able to identify better with the business owner what it was that they really needed to know. What do you feel it was that you felt you saw that was different? What is it that you were drawing attention to that others maybe weren't even noticing?
Yeah, that's a great question. I think it was very unique to each business owner, but
Right?
to really summarize it or generalize it, I think it would be really understanding the business itself.
Okay.
What I think a lot of accountants do, and this is a generalization, I'm sure it's not every accountant, but they're so focused on the numbers that they don't really take a zoom out and take that, like, 10,000 foot high lens of the business, as well as the business owner's goals. Because as a business owner, everyone has different goals. Some want to expand, become the biggest, largest person in the space. Some just want it to be able to pay their bills and live a comfortable lifestyle. Some are just really passionate about the product they're offering, and to them, the most important thing is to have the best product, right? So when you first understand the business owner's goals and then fully understand the business itself, I think whenever then you're looking at the spreadsheets and at the financials, you're always thinking about the other things in the background and relating the two to each other. And I'll give you a kind of like a small example, right?
Please.
So one business I worked with, which is a marketing company, they have multiple divisions, and one division is kind of like their sexy brand division. So it creates a specific culture for the business. It affects the way the business is perceived, but it wasn't really a profitable division. Now, someone just looking at the spreadsheets who's not really getting in, understanding the business, the nuances of the business, they might be saying, hey, like, this division isn't doing well or whatnot. But realistically, the only goal for that division wasn't necessarily to be a huge profit center, but really just to break even, because it brought non-financial or non-quantifiable value to the business that you're not seeing in the spreadsheets. So that's just one little example of really zooming out and going outside the financials to understand how every piece of the business works, right?
Yeah, you're talking about a story that exists for that business, and they understand why this department is different than the others and why there's something unique about it from a financial perspective. And unless you're understanding what you just described as an accountant, you might see, well, the margins aren't there, the profit isn't there. So it's basically enabling you to have a conversation with the business owner from their point of view. So I like that.
Get your free copy of the book In the Black, 9 Principles to Make Your Business Profitable. This is a how-to guide for accounting professionals to work with their clients and actually implement proven processes and systems to ensure that their clients make profit a priority. It is in this book you'll actually learn how to map the business and, in fact, make marketing, accounting, and production a priority within your client's business. You also learn the wisdom pyramid, how to actually take the information you're providing to your clients and effectively effectively use it so that they can make more informed business decisions. This book is designed to help you communicate more effectively with your clients and, in fact, have them see you as their profit and growth expert. Get your free copy now of the ebook today. In the Black, 9 Principles to Make Your Business Profitable.
Now, because you run Unloop and you actually help with the bookkeeping side of things, the services being offered there, and at the same time run Storyline Financial, which is more in the CFO and advisory space, I'm curious, when working with businesses, how would you define bookkeeping services and how would you differently define CFO and advisory services? I'm curious the description that you'll provide.
Yeah, so the bookkeeping side of things is, to simplify, it's really categorizing and recording everything that's happened in the past, in a way that's compliant with, GAAP regulations, and to set up the business to be able to, file their taxes come tax time and their books are all in order.
Yeah.
So it's really just more of a compliance kind of game and really looking at the past. The fractional CFO, the advisory side, I think it's taking that past data and being able to look forward with it. So using it to be able to make predictions and forecasts, as well as being able to dissect that data to see the health of the business. A lot of times, bookkeeping side, as soon as the month or the year is closed, that's where their work ends. There's no more communication about anything. It's just the books are done, everything is cleaned up. Whereas the fractional CFO side, it starts once the books are closed. That's when you go into the analysis. What happened this month? What are the KPIs that you should be tracking? And then once you track them, what is the story that those KPIs are saying? What decisions do you now need to make based on this information? And a lot of times the business owners, they're not sure what KPIs to track. They're not sure what levers are the ones that are affecting their business. So you're there as a strategic advisor. And I often say the CFO or the fractional CFO is the CEO's best friend, because he's having a conversation with the business owner that no one else is having. And they're also talking about data that's very privileged data. Like a lot of the information there, no one else in the company knows sometimes, other than the CFO and maybe a few department heads. So it's very private, sensitive information that's talking about the health of the business. So it lets the CEO or the owner have someone that he can share some of maybe his biggest fears with, about, where the business is going, that kind of thing.
I love it. Your description that you gave is exactly how I would see it as well. The bookkeeping is on that compliance side. It's kind of that necessary thing that the business needs to take care of whatever tax obligations they have, just to have the financial reports needed to run the business. But when you move into that CFO advisory space, that's where that terminology of the trusted strategic advisor starts to creep in. It's that relationship, as you were describing, that CFO, they're going to know things about the business that only a handful of individuals at most may be familiar with. And there is a friendship, a collaboration that's going on there, because that safe space that the business owner has with their CFO allows them to be in that visionary state, allows them to kind of explore what are the potentials for the business. And it's really where they become vulnerable as it relates to their risk and what it is they're experiencing in the business. So thank you for that description. So I'm curious, what are some of the signs that indicate a business owner is ready to invest in and have a CFO as part of their business model? That there's, basically indications that this is the right time for them to actually move into those types of services. And what would you suggest are signs that they're maybe not ready?
That's a really good question. Some would say, it never hurts to have that CFO advisor on your side. But again, this is probably one of the priciest things to have in terms of the finance accounting world. Where I think it really becomes necessary is if the business is going through change. Now, the change can be rapid growth. It can also be shrinking. It could be moving into different spaces, pivots. because with change comes big decisions. And these decisions are often done by gut, by instinct, not based on data, based on numbers, based on information. So I think when there's this change, when there's this growth, when you need to start investing or making cuts, and you want to know how this is going to affect the numbers, how is this going to affect the bottom line, this is one of the most crucial times to have that fractional CFO, that advisory piece with you. And, people might think that a business that's growing very rapidly, their revenue is growing, that's great. There's no downsides to that. But I've seen businesses fail because of that, because they were not equipped for those changes and they made decisions that hurt. Money can go out a lot faster than money comes in. So sometimes you see the sales are going up, the revenue is going up. All right, let's invest, let's hire, let's do this, let's do that. And all of a sudden, you've blown all that revenue on initiatives that aren't returning, having good return on that capital that's invested. So I think in those scenarios, it's almost a no-brainer that you need that. But there's also another side of it, which is the size of the business.
Okay.
And I'll put it in a simple way, revenue-wise, right?
Okay.
It's not always the case. You can have a $10 million company that sells one product, has 3 employees. In that case, revenue is not that big of an indication that you need a fractional CFO. But typically, as the revenue grows, that means you're hiring more people. You probably have more sales channels. You probably have more divisions. You probably have more products. So I think once a business reaches past $1 million in revenue, they really need to start thinking about having that strategic advisor come in. And you can always, control how much. Like, you don't need a full-time advisor or a full scope advisor. You can bring one in on a quarterly basis. You can bring one in just doing minimal things, but having that layer there is important. And one more thing I want to say is that oftentimes that fractional CFO, they also play a part on the bookkeeping, because they'll act a little bit as a controller. They'll look at the bookkeeping and make sure it's being done right, and make sure it's being also done in a certain way where you can extract the information you need from it.
Well, I would definitely agree with the fact that they should be using the financial information that's being produced by the bookkeeper. So clearly they need to be involved there, and their perspective, making sure it's done right, if you will, is a great way of saying that they're involved with the numbers to help with that visionary aspect of the CFO role. So I'm curious, you mentioned KPIs. Having worked in larger corporations and now working with the smaller businesses, what are your go-to KPIs? Or more importantly, are there any different KPIs as you see it relates to smaller businesses that are very important?
Well, yeah, like the perspective I got from working with big corporations was really important, because I translate that directly to the small businesses, and I don't really change it much. I take exactly what was happening in big corporations and bring it to small businesses, where most of the times they don't have that. There's the KPIs, there's so many of them. And again, it's very unique to the business. But one thing I always like to track as a first basis KPI is your gross profit margin. So that's not your net income. This is literally just the profit of delivering that service.
Okay.
Whether it's, what you sell the product for minus what the product cost you, plus, other things of delivering that product, such as shipping, merchant fees, whatever is left over just from delivering that product or service. That is a very important KPI, because again, a lot of business owners simply look at the revenue line, and you can have huge revenue which doesn't translate to any gross profit margin, because it's just you're inefficient in delivering that product or service. So I think that's the number one first KPI as a starting point. And then after that, the list is endless of what KPIs to track.
I appreciate that KPI. That's one that I also pay attention to, because you've got your total revenue, obviously what's coming in through the invoicing that you're doing. You've got your cost of goods. And then from that, you've got your gross profit. And if you look at that as a percentage, what percentage gross profit is of total income, you'll actually be seeing the influence of inflation as it relates to the various costs going up. And this has been something significant in the last maybe 2-3 years, as we've seen the tariffs come into play, as we've seen inflation roll out. What's happening is those costs of goods have increased for so many individuals. And the easiest way to see what that percentage increase has been is in the gross profit. And one of the things that I think is helpful is that then is the indicator as to what price increases may need to occur in the business to increase the top line revenue to get back that margin that you're familiar with. So great points on that. Now, as it relates to your experience, I am curious, you're running these businesses, you're working with the business owners. What have you found that the business owners appreciate when it comes to the CFO and advisory services that you're having with them? Because the relationship's different than they may have had with a bookkeeper. The friendship that you alluded to earlier, they're clearly a lot more involved. So how often are you meeting with that CFO client versus a bookkeeping client?
Yeah, I mean, with the bookkeeping clients, some of them there's no meetings at all. Some of them it's literally just an email. The month is closed. Here are the reports, and we don't even know if the owner's reading the reports or not. On the CFO side, it could be once a week. It's typically, I find, minimum once a month to just go over what, once the books are closed, what's all the data is saying. Oftentimes it comes with a report. So, there's a report going over everything that's important, and then you meet and you discuss the report. And I do find the advisory stuff, it's something that the business owners are really enjoying a lot more, because the bookkeeping, they don't really care about it that much, even though I can go on and on about how important it is to have good bookkeeping and how much money you can be saving or leaving on the table without that. But really it's the advisory stuff which really connects with the owners, because the owners, the business, it's often, it's their baby. It's the thing that they think about, you know, during work, after work, in the middle of the night, and talking about it. It's really important to them, and understanding if it's doing well, or even like, back to that, special friendship is when the business is not doing well. That's often something they can't talk about to most people. They can't let all the employees know, hey, we're in rough waters right now. You have to keep the morale high. So being able to share that with someone is really important. But the more you meet, I think the better the decision-making process is for the business owner. So once a month, I find is what's the average, and it gives you also a little bit of time to gather more data. If you are meeting on a weekly basis, from one week to another, maybe you don't have that much new information to discuss.
Learn the turnkey process for starting and building a successful accounting business. It's in this course, so you'll actually experience 4 specific trainings. Part 1, your business plan, everything you need to know to get started. Part 2, how to price your services, the pros and cons of different methods, and the best way to price your services that are both profitable and professional. Marketing and selling your services so that you can actually be top of mind, but more importantly, how to actually be seen as a trusted strategic advisor. And last of all, mapping it all out. 5 principles in running a profitable business so that you can be both competent and confident in the services you're providing. Learn now what it is you can be doing to start and build your own successful accounting, bookkeeping, or tax business. Go to the episode description and there get the information you need to take advantage of this today.
So you're running 2 businesses right now, a bookkeeping business, a CFO and advisory business. I'm curious, one, how you're managing the 2, how much time you spend in either. And then the second question I'd have is, what do you think from an owner management point of view is the distinction between the 2? How do you run them differently?
Yeah, so the advisory piece, it's essentially, it is a business, but there's no employees. It's just essentially me.
Okay.
Whereas Unloop, the bookkeeping business, it's a full business. We have a team of 12. It's definitely the bigger chunk of my time goes to that, but there is some work that's basically crossover work. So Unloop does handle a lot of the bookkeeping for my advisory clients. And one of the good things about that is oftentimes on the advisory side, we did mention that you do need the books to be a certain way to be able to do the advisory work. And it's not just are they being done right or wrong, but there's also how much details in them. And I'll give a quick example
Please.
for some people who might not be in the accounting space, even though I know most of your audience is. But a lot of times the entire revenue will be coming at one line, saying revenue, right? And this is completely fine. It's completely legal for tax purposes. They don't care. But you won't be able to know which division is doing better than the other, which sales channel is doing better. So letting your bookkeeper know that we need to categorize all the revenues by division, by sales channel. We need to categorize all the costs also based on these divisions, so you can see each division, how it's doing. The more categorization, the more layers, the better the data is for the decision making. So again, that's why it's good to have both pieces working together, because a lot of times if you come in just as an advisory, the numbers aren't good enough for you to do anything, and then you end up having to play bookkeeper or to manage the bookkeepers anyways to get them to do things right. So now I have both sides of the equation, so it works kind of in tandem.
I really appreciate you pointing that out, because oftentimes in the advisory work that I do, one of my first go-to things is looking at the financial reports and noticing so often how many times the total revenue is a single line item. And so the chart of accounts, we're going to break that out. We want to understand what's happening there. And so I couldn't agree more, because that is a wealth of information as it relates to the profitability of the business. And too often it's just masked in that single line of total revenue. So well done on that point. So I know you specialize in e-commerce. I'm curious, there's obviously the niching component of that. Why did you choose e-commerce? How's that worked out? But what's the unique thing about e-commerce for my listeners to understand the perspective of what's, let's say, particular about that industry?
Great question. And I'll touch on the niche thing as well that you said.
Yeah.
I think that it's in the accounting space, and I know a lot of your listeners are in that space, and maybe they're not in a niche, and maybe they're doing a little bit of everything. I think going into a niche is super advantageous. One, because you become an expert in that space.
Uh-huh.
And we'll talk about the differences in different spaces, right? It makes a huge difference in how you do your accounting. So being really good in one type of accounting is an advantage. It also becomes an advantage in gaining clients, because for clients, they'll often want someone who's a specialist in their industry. So it's easier to get and retain the clients, but it's also easier for you to do the work. You can set up systems that really work for that type of accounting and not have to have a completely different system for each subset of clients, basically. And now to touch on what's different with the e-commerce. So in e-commerce, it's always selling a product, right? So, the challenge is often around the cost of goods sold, the cost of that product, and the inventory. And it's different than other accounting. So let's say, construction companies, they're working on big projects that sometimes span months at a time. And the costs will vary throughout the project. There'll be new stuff, unexpected costs. So for them, it's really being able to see on which month, how much of that revenue do we recognize on that month, and tracking the expenses to the specific projects, which is something e-commerce accountants don't have to do at all. The e-commerce accountants, they're really focused on the products, on the merchant fees, on the Amazon fees, being really good at reading those specific reports, most of the time from Shopify, from Amazon. I'm not sure if you're familiar, Amazon reports are not the easiest to read. So, becoming an expert in that field, having systems around inventory, being able to have first in, first out systems to accurately track the cost of what you're selling. Those are things unique to this industry. And I got into this industry just because of my previous experiences was in this industry. So it was a good transition. And I'm also an avid consumer. So I shop a lot on e-commerce. So I think I also have the customer perspective as well as the business owner perspective.
I like that. Well, one, the customer perspective, being able to understand the industry from that point of view, I think is very helpful. But the thing I'd add to what you shared is with e-commerce, it's a lot of integrations from one software application to another software application.
Yeah.
It's how do you bridge that information from, let's say, Amazon now into, let's say, an inventory type system or a QBO. It's all that kind of taking the data from one and merging it over to others. So, and that can break, and that can be something that needs to be mapped, and it's the accountant that's needing to get in there and map that accordingly so that you're getting that tracking that you're expecting. So very good insights on the e-commerce side of the business. The other question I wanted to ask, and I know this is something that came up in a previous conversation, and was regarding empathy, that you're a big believer in how empathy plays into the relationships that you're having with these business owners that you work with. How do you balance the empathy that you're trying to have with the client as it relates to their actual financial numbers and what's really occurring within the business?
Yeah, and I mean, one thing I often say to a lot of the people that I work with, and when I say it, they're like, you don't even have to say it, I know it, is that I truly care.
Uh-huh.
I really want their business to succeed. I truly care. I feel like I am part of their business. And part of that is empathy, but part of that is also just from the fact that if their business succeed, I succeed as well, because as their business grows, my business grows with them. So I do really care. And part of that comes, the empathy piece. But as you said, around some of the difficult conversations around when things aren't going well, what I do is I'm honest to a fault, right? So I will have the hard conversations because I have empathy, because I understand that these aren't comfortable, but they need to happen, because without them, the business can suffer. The owner might have to let people go if the business doesn't do well, right? So again, like I care about the business owners, but as well as everyone else working within the business. So you need to have those tough conversations and keep keep emotions out of it a little bit sometimes, because you can't cloud your judgment sometimes based on emotions. You've got to look at the end goal, and the end goal is, let's make the business succeed. When the business succeeds, everyone within the business, connected to the business, even the family members, everyone benefits from it. So
Yeah. Well, there is a good deal of information as it relates to the empathy. And one of the things that I think we all need to realize as we work with our clients is there needs to be that relationship where we can have those emotional exchanges with our clients. They need to feel heard and understood. They need to have a safe environment because, as you pointed out earlier, we're oftentimes in the know of information that very few people are aware of. So we have to respect that, and that vulnerability that the clients had in sharing all this information with us and having those candid conversations is them being vulnerable. And we have to be very sensitive to that. So I'd like to take that a step further and ask, what does a great relationship with a founder then look like in your mind?
I really like what you said about their being vulnerable, but you have to be vulnerable as well, because it's going to be hard for anyone else to be vulnerable if you're not vulnerable with them. So I think it's important to share what you're going through as well, because we're all also in businesses, running businesses. We're going through the same things. So to let them know that they're not alone in what they're going through, it's really important to make that bond. Another thing I like to do, and I'm not always able to do that because not everyone I work with is in my geographic location. But for the companies that are in my city, I do like to go in person and see them, see their office, see the staff, meet the staff, kind of, again, understand a little bit more background about the business than what you can just see looking at the financials. You can even see, the person in the company who, we talked about the division that maybe not the profitable division, but sometimes it's that person who maybe they're not producing the most output, but they're the morale builder. They're the person who's connecting all the employees and bringing a positive environment to that workspace. So, really going there, seeing the person face to face, and even for those who aren't in the city, the meeting and having your camera on and connecting that way, those are all important things that sometimes people in the accounting space, they don't prioritize, and it gets left a little behind. And I know a lot of accountants, they didn't get into the field because they're extroverts, but oftentimes they're, they like to be behind the computer screen. They like to be looking at numbers. But it's again, it's important to know that we're dealing with people. We need to build that connections. We are more than just a provider. We are their partner, and sometimes one of the most important pieces in their business.
Very well said. Very well said. So, having run a number of businesses, I'm curious, what is different or unique about the bookkeeping business that you're running, and what is kind of that positive? What's one of those great attributes of running a bookkeeping business that's different than perhaps the restaurant business that you've enjoyed?
Yeah, I think what's different about the bookkeeping business is that people are paying money for something and they're not necessarily getting something back right away that they can see, right? So, whether you're in e-commerce, you're buying a product, you get that shipment in the mail, you're all excited, you open it, this is my new t-shirt, this is my new toy accessory, or this is my amazing food, I'm hungry, I get to eat it right away. But with bookkeeping, you're paying your monthly fee and you don't really see what's going on. It's almost sometimes like insurance. You pay your insurance bill, but you just do it because you have to. So that's one of the different things. It's you have to really communicate to the client what they're paying for a lot more than selling a physical product.
Interesting.
Yeah, so the communication piece I think is important. And again, one of the pieces I often find missing in people in the accounting space, to let them know what's going in. But then again, the advisory piece. So not everyone who has a bookkeeper gets the advisory piece, but you don't need to, have an advisory scope to give them a little bit of, hey, here are your reports and a quick, I noticed this was good this month. This has gone up. It can take you an extra 30 minutes to an hour to do that, but it communicates so much more to that individual, and they'll find that value coming from it. In terms of the upside of being in that space, again, I find it's very rewarding to be able to really see the health of the business, to see the ups and downs. Like, when you do sell a product, you then no longer know if the person's enjoying the product or what's happening to them after. But when you're in the weeds and you're doing the bookkeeping, especially if you're on the advisory side and you're helping make decisions and those decisions yield positive results, seeing how you're affecting the business, the people in it, it's very rewarding.
Get your copy of Red to Black. It is the book written for accounting professionals to help businesses turn around and go from being in the red to being in the black. This book is written for consultants, business owners, operators, and managers, no matter what your client's product or service, or irrespective of your talent, skill, or expertise. As an accounting professional, you'll be able to use the principles presented in this book to actually become, for your clients, the profit and growth expert. Every chapter is filled with principles and concepts that you can use immediately with your clients to lead them from being in the red to being more profitable in their business, and see you as, in fact, their guide, their coach, with the expertise and wisdom that you can bring from this book. In the book, you have how-to guide explanations. You have models that you can follow. You're shown how to actually calculate and determine the fees for your services, the actual model that you'll use during the implementation of all this, and most importantly, the end-all results with your clients. Get this book now and see what it is you can do to offer this new revenue-producing service as, in fact, the profit and growth expert. For more information on how you can take advantage of this offer, go to the episode description and there get the information you need to take advantage of this today.
All right. So you're an entrepreneur. You have this in your blood. You've been doing this for a number of years. I am curious, what are you grateful for?
I'm honestly grateful for the opportunity. I'm grateful to be able to have that effect on people's lives. I'm grateful for the trust they give me. It's one of the big things to let someone, again, do the books of your business. There's a lot of trust. Oftentimes we have access to all their bank accounts because, it's annoying for them to send their statements. So they give us access to everything so we can just pull everything. So having that trust, I'm super grateful for that. And being a part of businesses, because again, having been a business owner, I like the business space. I like being in this space. I know how much of a risk it is to open a business. You're putting your money, your name on the line with absolutely zero guarantee of anything's going to come out of it, right? It's not like you're working a job, no matter what happens, you're getting that paycheck. So I appreciate entrepreneurs. A lot of people don't know this, but I think around 90% of businesses in North America are small and medium businesses. So I know most people, they only know the Walmarts and the big names, but actually 90% of all businesses are small businesses, are a founder who put the risk. So and every one of those big businesses also started as a small business, right? So I like to support the entrepreneurship community. I love to see innovations. I love to learn from what they're doing, because every founder and CEO I work with, they always have something unique that they're bringing to the table that I can learn from.
Yeah. One of the things that I thought you said earlier that I'd really like to draw attention to is the relationship you have with them is a peer relationship. You're a business owner, they're a business owner. And I think it's that collaboration that allows you to gain the respect that they're having of you because they see you in that light. And that's one of the things that I think is so powerful about what we do in the accounting space is we come to it with our expertise as a business owner and meet them on that same playing field of they're running their business, we're running our business. Let's talk about those things as it relates to strategy and so forth. So that's very, very important. So here's what I'm going to do. I'm going to start wrapping things up. And as I do so, I'm going to come back to you for a closing thought. But I do want to invite everyone, if you haven't already, I would like you to consider connecting with Shady, and you can do so on LinkedIn. He has a LinkedIn profile that he would invite you to connect with. I would encourage you to do the same with me, as well as you can check out his website and see what he's doing as it relates to bookkeeping services as well. Now, in addition to this, one of the things that I'd like to also highlight is the Accountrepreneurs Challenge. We actually have as a special offer for all of our listeners what's called the Accountrepreneurs Challenge. It's where we're actually inviting you over the next 90 days to work on your business as well as yourself. It's here that each week you're going to get different challenges that may take 15 minutes, perhaps an hour a week, where you're able to actually now focus on things that improve you as an individual as well as your company. So take advantage of the Accountrepreneurs Challenge. Sign up now and do these weekly challenges so that you can actually find the time to work on you and your business in the coming days and weeks. Now, that being said, I also want to do a quick summary of our conversation. I've really enjoyed this simply because of the fact that whenever I work with entrepreneurs, people that have that drive, they do have this tendency to start and build many organizations. And that's exactly what happened here. He, in starting out, had 2 successful businesses, each of which he sold, one of which he indicated that he opened the doors when his wife was now announcing that she was expecting. How exciting for that. And that, I think, illustrates well the surprises that we experience as business owners. We go into things and then life brings that curveball to us and we have to adapt to it. And that's one of the things that I really pride entrepreneurs on, is they are adaptive. And that's so important. As it relates to bookkeeping and accounting services, he's clearly distinguished between those different services from the two companies that he offers or runs. And by running these two companies, he's clearly able to focus and niche, as he explained, in the e-commerce space in the bookkeeping services. We talked about the nuances as it relates to what those things are and why that's a particular thing to do. It allows you to specialize, become an expert in a particular thing and know the nuances of it. But at the same time, he described, I think, very well what the differences are between bookkeeping services and CFO and advisory services. And one of the key elements that he described as being essential in that relationship is having that relationship of trust, understanding that they're going to be vulnerable. But he also encouraged us to be vulnerable because in that safe space, they're able to now be forward thinking as it relates to their company, looking at potentials, opportunities. And it's in there that we might find the vulnerabilities of them struggling at times, dealing with challenges, and them being willing to actually share what those frustrations are. So I thought that was a very healthy part of the conversations, to understand the difference between what it is bookkeeping and compliance work looks like and is versus the CFO and advisory space that many of us are moving into. Now, as it relates to his gratitude, I really appreciate the fact that he was able to express a lot of the things that he is grateful for. Why? Because as we run our businesses, I think that's an important attitude or mental philosophy to have as we're dealing with the various things that we do. And having that gratitude as part of our mindset is so, so helpful. So a lot of great things there. So Shady, I do want to ask, what would you like to end with as a closing thought?
For the listeners who are accounting firm owners or on their way to become accounting firm owners, I do want to reiterate the advantages of specializing in a unique industry. I know it could be scary to say no to a whole lot of potential customers, but like I mentioned before, 90% of businesses are small businesses. There are a lot of customers out there. So by niching and specializing, it can create a lot of advantages, both in terms of getting revenue, but also the day-to-day of the business. And like you said, with business owners, there's a lot of unknown challenges coming along. So I think it sets you up to be able to tackle those challenges a little bit easier by niching. And again, the gratefulness, it's very important to have that mindset. On a day-to-day basis, we're putting out fires, we're dealing with a lot of stuff that maybe it becomes hard to have that appreciation, but keep your eye on the ball, always be grateful. We do have a unique opportunity. We are working, we're doing something that we love. So it's important to keep that mindset.
I love that. That's very important. Yeah, mindset is a huge part of this whole factor, simply because of the fact that it impacts how we see things on a day-to-day basis. So very important. So here's what I'm going to do as I wrap this up. I'd like to actually encourage you, if you haven't already, subscribe to the podcast. We'd love to have you as a regular listener, hearing the various things that we have to share as it relates to building the premier accounting firm in your area. So if you haven't already, subscribe now. Listen to each and every week when we release a new episode, those various insights that you need to be considering as you're running your business. Now, also regarding all of the things that we've discussed today, if you'd like more information regarding these principles and the various strategies that we've gone over, feel free to reach out to us at Universal Accounting Center. You can contact us at universalaccountingschool.com or at 801-265-3777. The other thing I want to do is that Accountrepreneurs Challenge that I expressed earlier, that one thing I think is a great thing for you to do in the coming weeks, so as to give you the perspectives of where it is you could be doing better, both personally and professionally, as it relates to offering accounting services. So if you haven't now, go ahead and go to universalaccounting.com, and in the free resource section found in the navigation, go to step 2, where you'll find the Accountrepreneurs Challenge. And there, actually go ahead and participate in that. The third thing I'd like to actually invite you to do is go to universalaccounting.com and check out the podcast section, where we actually have not only the past episodes, but we've compiled highlights, playlists that are actually designed to actually help you dive deep into those various things that are specific to your current situation. So if you're looking for information regarding marketing, selling, pricing, tech stacks, training your staff, all these types of principles are actually found there in the various playlists that we've collected now over the number of years that we've had on the show these great guests. So go find those playlists that are specific to your needs and binge listen them. The other thing that I'd like to do is also invite you to GrowCon. GrowCon is an annual conference that we have for accounting professionals. It's here that we have owners of bookkeeping, accounting, and tax businesses come together to not only collaborate and make connections and see what it is that we can do to better service our clients, but hear from the experts from the stage, and also at the same time visit with my staff here at Universal Accounting, who are committed to helping you be in business for yourself, but not by yourself with Universal. The last thing I'd like to mention is if you're looking to offer and expand your services, do check out the various programs that we have available for you and your staff so that you can offer quality accounting services as professional bookkeepers, professional tax preparers, and also profit and growth experts. And with that said, I invite you to have a wonderful day. Take care and be safe out there.